Good afternoon, everyone, and welcome to our next edition of the YouTube Live Trending Thursdays. Glad that you're all here. Thank you very much, Trade Shark. I appreciate your comments right away. Way to go, Rich. All right, so glad to be here. Glad that you all are here as well. If you want to chat in, please chat in. Let me know that you're here. Let me know that everything is working. To my left, actually to my right, is Joey. Say hi, Joey.
Hello.
He is my, what are you? You're my producer, yeah. Not my super producer, but my producer. You know what's different? You got the big light on. Is the big light always supposed to be on? All right, well, Joey is the guy that sits in the background, and he allows me to look as good as I do. It's not much work on his part to make it happen, but it is what it is. But I think that he does a great job, so say hello to Joey. Hi, Joey. All right, so again, thank you for being here. Alessandra is here from the Dallas User Group. Anybody else here from the Dallas User Group want to chat in, by all means, please do. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest, and it's my pleasure to be here for these live sessions. And if you're brand new, this is a session where we talk about stocks that are moving the market or stocks that are in the news, and we analyze them and see if VectorVest coincides with the story that is going on. What you're going to find is if you're in some of these stocks, you may want to reconsider still being in them. Or some of these stocks that are going up, if you're not in them, these may be great opportunities to jump on board with stocks that are in the news. VectorVest confirms that they are doing well, and you can take advantage of them as well. So it's a double-sided sword. Good afternoon, KK. Good afternoon, Robert. Badger is here. Joey keeps the show rolling and under control. You hear that? That's from Tom. That's from my good friend Tom. So I'm always glad that you guys, that I do the names that I see that you are. Many of you are VectorVest subscribers. Some of you may not be, and if you are not, do not be afraid to ask questions. And I will allow some time towards the end of the presentation to look at your individual stocks as well. Let's take a look at what they're doing. They may not be in the news, but we can use the power of the VectorVest software to analyze those stocks to give you some good insight on if they're okay to be looked at. Can we type our stocks in the room yet? Not yet, Trade Shark. Not yet. I will tell you when you can. I will tell you when you can. A couple of things I have to do real quick. Here we go. I had to move some of this stuff around. I've got two of these for crude. Okay, and as Joey is letting me know, even though he's saying, make sure you like, share, and subscribe. Like, share, and subscribe. All right, crude, Rite Aid, blah, 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 blah. All right, so I'm just making sure that my stories are set the way that they need to be, and away we go. So first thing we always want to do, is this the right time to be in the market or not? Is this the right time to be bullish? Is this the right time to be bearish? So we always start off the session looking at market timing. And for those of you who may be new, yes, you can time the market. We time the market. We have 7 different market timing. Which way? Seven different market timing signals based upon how you invest in the market. And when we say we time the market, we are trend followers. We follow the trend of the market to keep you on the right side of the trend, no matter what type of investor you are. All right, so when we say time the market, it's not about predicting which way the market is going to go. We keep you on the right side of the trend. So I'm going to start off looking at our homepage. This is the homepage of the VectorVest software. For many of you who are not subscribers to the software, this is a view of what you see when you first open up the program. First, we can clearly see what's going on with our major indices. Actually, that's not the major indices. Where's the major indices, Joey? Oh, Lord. Well,
They get moved around again?
yeah, they got moved around. No, I'm not going to mess with it.
They're not right there?
Wow, why are they over there? Anyway, here are, you moved them around. Anyway,
That's where you put them.
no, I didn't put them that way. Anyway, all of the major indices are down. The Dow, the NASDAQ, the S&P, and our VectorVest composite. And this is the indicator that we use for timing the market, because this indicator, the VVC, looks at the movement of 8,314 stocks. We feel that it is a better representation of the broad market movement. So all of the major indices are down, not by a ton. The NASDAQ is leading the way, down almost 0.6%, but the VectorVest composite is also down about 0.3%. We go over to our market color guard. This is tracking the movements of the price of the VectorVest composite, the RT, which looks at the short-term price trend of the market, and the buy-to-sell ratio, which looks at the overall health of the market. And we assign tile colors based on their movements on both the week-over-week and day-over-day basis. If you get a red tile, that means that indicator, like the price of the VectorVest composite, has fallen on a week-over-week and day-over-day basis, so we assign a red tile. The same thing occurs for both the RT and the buy-to-sell ratio as well, giving us 3 red lights in the color guard on the top row today. The best way to use this color guard is to use it like a traffic light. What's the main color you see in the color guard? Well, let's count. We've got 6, 12, 18 boxes here. 1, 2, 3, 4, 5, 6, 7, 8, 9 red, which means that we have 9 yellow. The market is cautiously bearish. We've got if we had 1 more red and 1 less yellow, that way we'd be more bearish than anything. So when we say, again, from timing the market perspective, this color guard gives you more insight as to what's going on in the market by tracking 3 of our market timing indicators, all right? So we've got 9 red, 9 yellow. Our color guard or market timing gauge is 3 ticks in the red today because we have 3 red lights across the top. Now, I'm going to take this one step further. I'm going to bring up the market timing graph, which is looking at the movement of that VectorVest composite, now shown on a 1-year graph in candlesticks. When we track the movement of over 8,300 stocks, we get a better feel of when the market's moving up, when the market's moving down, and when the market is moving sideways, as it has most recently within the last year. How do you use this? Well, we have moving averages on our VectorVest composite. Looking at the 3 and the 8 exponential moving averages gives you a good opportunity to get in and out at the right time. We also look at things like support and resistance as a way to get in and out at the right time as well, bouncing off of resistance or bouncing off of support, utilizing those indicators to help us to get in and out. And I'm going to put this now on a 3-month graph. Is it the right time to be in the market? Well, the market was in a bit of a channel right here, finally broke through a level of resistance right here at $47.33. Broke above, market went higher. After that, the market now started tailing over. The 3 and the 8 exponential moving averages have crossed to the downside on the date of 9/23/2019, which was about 3 days ago. All right, and now currently with today's activity, we have a red bar, a closed red bar, denoting that we have a down day today, but we do have some buying pressure with a long wick at the bottom of the candle, showing that we've got some buying pressure going into today's candle, even though it is still red and on a down day. So is this the right time to buy stocks long? The answer to that is based on the movement of over 8,300 stocks, probably not the right time to buy stocks new. But if you're currently managing your portfolio, do you panic sell? No. Let your stops manage the trades that you currently own. That's the important thing. You know why? Because that is part of your plan. Plan your trades, trade your plan, and that keeps you more in the way of being disciplined. And the best, is that a good word? No, probably not. The best investors are those who still remain disciplined. Plan your trades, trade your plan. Good afternoon, Kirby, and good afternoon, Saborium. So let's talk a little bit. Now we're going to get into the Trending Thursday portion. Why is the market doing what it's doing right now? Why is the market turning over? Well, let's talk about that a little bit. Let's get into the stories. All right, let's get into the stories. And the stories are going to start to open up your eyes as to what's going on. Joey, can you fix that for them?
Yeah.
All right, Joey's going to fix that so it looks a little better. You know why? Because Joey is awesome. Well, maybe he can't fix it. There you go. Well, we'll do it that way. All right, so interesting that the stocks, Where's my mouse? There it is. Stocks slightly lower. Why? As trade optimism sours, investors keep an eye on impeachment. Now, one thing that I do not get involved with in my sessions is religion and politics, unless politics affects what's going on in the market. This is a very news-driven market. Do you understand that as of yesterday's, going into the close yesterday, there was a tweet put out by the president talking about there may be a meeting on with China, and the market took off. Market took off, and that news spurred on a nice movement of the market towards the end of the day. But what's hurting the market now is that more people are keeping an eye on possible impeachment proceedings against the president due to a call made to the Ukrainian president. And you can read the transcript. I'm not going to give you my opinion. It's not going to happen. All right, it's not going to happen. But there's a lot of news about impeachment proceedings, possibly impeachment inquiry. That's what it is. So it's just the wording. And based upon that, it is affecting the market to an adverse effect. So looking at that information, let's go back into the software. So that is what's affecting the software. Let's go back into the software, and I'm going to I've already created a watch list of stocks that we're going to talk about today. One of them is the spiders. Why? Because that's what a lot of people use to gauge what's going on in the market, the stocks within the S&P 500. So if I look at that today, it is down today. Because it is an ETF or an exchange-traded fund, we can't use our indicators like relative value and relative safety. But what we can look at is an indicator called relative timing, which looks at the short-term price trend of a stock, or in this case, an ETF. Above the value of 1, the stock is in an uptrend. Below the value of 1, the stock's in a downtrend. So overall, we can see the RT on the spiders is above the value of 1. Our master indicator for ranking stocks is VST, also above the value of 1. The CI, or comfort index on the stock, which looks at the stock's ability to withstand long or lengthy price declines, is above the value of 1. When you find a stock that's got a CI above 1, it is a more resilient stock that even if it's caught in a downtrend, it won't stay there very long. This is a good recipe for good stocks to buy, and it's got a hold recommendation. So now we can see what's going on. The stock is in an uptrend. The VST overall ranking of the stock is above the value of 1. The stock is a hold. Let's right-click on it and view the stock graph. As we do that, open it up. Here's the S&P 500, the spiders though, which gives you the opportunity to trade the index as a whole instead of individual stocks within the 500. We can see, put this on a 3-month time period. You're still using the 3 and the 8 exponential moving averages. The market, or the S&P, found the top, pulling back. The 3 and the 8 crossed a few days ago on 9/20 and still going down. But look at this here. We got a little bit of a hammer formation by way of candlesticks. Could that be the sign of a reversal for the stock's price to move higher? We won't know that now until tomorrow. But the S&P 500, or spiders, are still moving down right now, which means if the index is moving down, the majority of the stocks within the S&P 500 are also moving down. I'm going to close this graph out, and I'm going to add one more ticker symbol in here that also wraps up with the S&P 500, and that's the VVC, or the VectorVest composite. Remember, our VectorVest composite tracks the movement of over 8,300 stocks. The spiders is a good way to take a look at the market, but it only tracks 500 stocks. So let's take a look at the VVC. RV below 1. That tells me that the upside potential on the market, or the VVC, is low, is unfavorable. Relative safety on the VVC below 1. The safety of the market, of all of the stocks within the market that we track, below 1, unfavorable. RT below 1, the short-term price trend of the VVC, unfavorable. The VST, or master indicator for ranking the stocks, unfavorable. The CI, the stock's ability to withstand long or lengthy price declines, below 1, unfavorable. Now, the earnings growth rate of all of the stocks is at a level of 5% a year. We're still growing the earnings overall on the stocks within the VectorVest composite. And we've already, I don't need to look at a graph of it, we've already graphed it, and we can see that on a 3-month period, it is turning over. So those two indicators, looking at the market as a whole, based upon the news that is in the market, is giving you a feel of why you need to be cautious if you're going to buy any new positions long. So that is the first story. Always is going to be about what's going on in the market and how to effectively take advantage of it. If you're still in long positions, tighten stops on the positions that you're in. If these are stocks that you're not trying to hold for the long term, don't be afraid to take a profit on those stocks instead of letting it all go away while the market is going through what it's going through. And sometimes you may just have to take a seat back or sit back and let the market do what it does before you start to put on any new trades. But don't let all your profits go away on the stocks that you're currently making money in. All right. Let's go to the next story, which is Beyond Meat. Personally, this is a stock that I made a lot of money on in a short amount of time. All right, Beyond Meat is a plant-based meat product, and Beyond Meat's stock soars after McDonald's unveils test of company-made PLT burgers. If we scroll down, shares of Beyond Meat soared in early Thursday trading after McDonald's Corp said it will launch in Canada a test using a plant-based burger patty made by the company. So a big name like McDonald's bringing on Beyond Meat is going to help to make that stock's price rise again. Now, when Beyond Meat really started running back in earlier this year, I personally bought 100 shares of Beyond Meat at $100 a share. And within about a month's time, that $100 price went to $200. I pulled out at $202, made 100% of my money in a short amount of time. So as I'm looking at that, could Beyond Meat be on another big tear because now McDonald's is on board with looking at bringing them on as a test site? The burger is called the PLT, which stands for plant, lettuce, and tomato. So like a BLT that has bacon, lettuce, and tomato, but this is a PLT, plant, lettuce, and tomato, and will be sold in 28 restaurants starting September 30th in southwestern Ontario. The trial is slated to run for 12 weeks. So this could be a big move for Beyond Meat, and let's take a look at it. Let's go analyze it. If we go back into the software, let's go find Beyond Meat, which is here. First off, let's go see what the stock's price is compared to its value. When we assign a value to a stock is what we feel the stock is worth based on things like earnings and earnings growth rate. Why? Because earnings is the engine that drives the stock's price higher. We have Beyond Meats valued at $20.37 and currently trading at $155. This stock is definitely an overvalued stock. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. Currently, if the stock is overvalued, does that make it a bad stock? The answer to that is no, it does not. It just means that people are willing to pay a premium to own the stock. People still feel good enough about Beyond Meat that it's surpassing what the stock's value is worth, and now it's a perception that the stock's price will go up, and we will see what happens. We'll look at RV, the stock's long-term price appreciation potential below the value of 1. That is unfavorable. By the way, if I did not say it, our core proprietary indicators, RV, RS, RT, and VST, and CI, are all cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. RV looks at the stock's long-term price appreciation potential as compared to an alternative investment in a AAA corporate bond. When you buy a bond, it matures. After it matures, you get all of your money back with a small interest rate, right? Now, what I'm saying with Beyond Meat, with a value, relative value at 0.60, what I'm saying is that that AAA corporate bond should outperform this stock over the next 1 to 3 years. Excuse me, sorry about that. So that's unfavorable. Long term, I may not want to own Beyond Meat. Relative safety, or RS, is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. Does this company meet or exceed earnings expectations year after year, quarter after quarter? Below the value of 1, when earnings comes out, this stock may or may not meet earnings. And if that's the case, if it misses earnings, stock's price is going to fall. When I look for a stock and hopefully that it's going to meet or exceed earnings, I want to see a relative safety above 1. That is what we call a safe stock. The next indicator, RT, which looks at the short-term price trend of the stock. RT below 1 tells me that the stock is in a downtrend, and the further below 1 it is, the lower or faster in a downtrend it is. At 0.68, it's unfavorable. And the master indicator, which looks at relative value, relative safety, and relative timing in one indicator, is also below the value of 1, unfavorable. But the stock's price overall, by way of perception, people willing to pay more than what the stock is valued at, the stock's price tends to go up more than it goes down, but the fundamentals are not there to back up the stock. This is where analyzing a stock helps you to make better decisions on the stocks that you buy and sell. This stock is not fundamentally sound, but people are still pushing the stock's price higher. It then does tend to go up more than it goes down. And it's got an earnings growth rate of 27% and earnings per share of 11 cents. If we right-click and look at the graph, there's the stock's price. Now, it has not been around for a year, so all of the data we have starts back in May, and it went up, nicely running up. This is where I was in the stock, where the stock's price was about $100, and got out when the stock hit in the range of about 200, 202. I got out. The stock's price did go up some more, but then after that, it fell. Currently, the stock is moving sideways in a channel. The 3 and the 8 are about to cross, but not yet. And if I'm going to think about getting in based on the news, let's see if the stock can break above this level of resistance right about here. Let me make that a little darker. Right about there is where I'm looking at. If it can get above this is a good solid level of support and resistance. If it can break above the value of 167.96, that may be a great opportunity to jump on board with the stock, and it's got upside to the level of the high, which is sitting at 239. You've got a good way to run on this stock, but as the news comes in and drives the stock's price higher, it gapped up nicely today. But I would really like to see the stock go above that value of 167.96 before I pull the trigger. And once you do, and it does, you've got good upside to about 240 bucks. That may not be a bad trade, but let the trade come to you. I do like that the earnings per share have gone from negative to positive. Your earnings is the engine that drives the stock's price higher. Earnings is getting better. This may not be a bad play. The news may come to you, all right? So let's close out of that graph, and let's go to the next story. The next story talks about the home builders, and let's scroll up. Home builders could be heading toward a bigger breakout. All right, let's scroll down. Home building stocks are hammering out gains this year. Companies like D.R. Horton, Lennar, KB Homes have surged more than 40% in 2019. And I'm going to show you where VectorVest already is ahead of the story in regards to this. Now, home builders still look constructive to him, which is Mark Newton. Newton said on Wednesday on Trading Nation, we've had decent uptrends so far this year. We've recouped a lot of what was lost last year. As many remember, 2018 was a very negative year for this industry group, but in general, we've almost quadrupled off the lows almost 10 years ago. So before we go into these stocks, I want to show you the power of the VectorVest software. As I go back into the software, I am going to go to, we're already in the Viewers tab. I am going to go from here to the Industry Viewer. Notice that as I open up the Industry Viewer and we look at the top 5 industries in the software, 1, 2, look at that building residential commercial is the number 3 industry in the database right now. So as we talk about these home builders, VectorVest has already had these home builders or this industry in the top 5 industries over the last 3 to 4 months. So always trying to find out what's really working in the market. looking at the industry viewer in the VectorVest software will always keep you ahead of the curve even before these stocks make stories. All right, so let's go back to the viewer, go back to the watch list viewer, go to trending Thursday 9/26, and we're going to look at 3 of those home builder stocks. So we already now know the story is there, that the idea is that they're going to continue to run. I showed you within the industry viewer that we've already been pegging that those industries like commercial, residential, commercial, and home builders was already amongst the leaders in our industry viewer. So we're going to look at DHI, which is DR Horton. The stock currently is trading at 52.40, which is a little bit undervalued. So this is an undervalued stock. That's good. Upside capability, relative value, above the value of 1, favorable. Relative safety, indicator of how risky the stock is, looking to see if the stock will meet or exceed earnings expectations, favorable. Relative timing, is the stock in an uptrend, above 1, favorable. Look at it, it's a buy recommendation. They grow their earnings at a clip of at least 10% a year. Let's go look at Hovnanian, also in that group. One is at 1921, a little bit overvalued. Relative value, the upside potential, not nearly as good as DR Horton at 0.91, below the value of 1, unfavorable. The safety, unfavorable, not as good as DR Horton, but the good thing about it is because the industry is running up, how about relative timing? The short-term price trend on this stock is definitely above the value of 1. Rising tides float all boats. If the industry is rocking, you would think that the stocks within the industry are rocking. Why? Because birds of a feather flock together. And we have the CI at 0.40. The stock is a buy. Now, Hovnanian grows their earnings at a clip of 19% a year. Let's go to the third one, KB Homes. Notice that if these stocks are sorted by our master indicator, VST, the top 3 stocks in this list happen to be the home builders. All right, KB Homes, a little bit over its value, so slightly overvalued. The upside potential, unfavorable. But this is a safer stock than Hovnanian because relative safety is above 1 and the stock is in an uptrend. Notice that all 3 of these stocks that are in that industry are definitely moving higher. Now, by analyzing these stocks, guess what? I can hone in to the best of breed within that industry, which would be DHI or DR Horton. Undervalued, the fundamentals behind the stock, relative value and relative safety, outstanding, and the stock is in an uptrend. So even though that industry is up and I'm looking at 3 stocks within that industry, I can now pinpoint which is the better play to take advantage of. But wait, be careful because the market is pulling down, right? The move or the direction of the market affects 80% of the stocks in the market. Even though the market's pulling down, this industry is still rising up. Just be careful if you pull the trigger because you will be trading against the trend of the market. Now, let's go look at these graphs to get a better feel. If the market is pulling down, let's go see what's going on with these stocks graphically. I highlighted all 3. If I right-click and I go to view the stock graph, let's take a look at them. Wow, DHI, remember that's the stock that we feel out of the 3 is got the best potential. Look at the equity curve of the company. Look at the stock staying more so a buy recommendation than not. Beautiful equity curve and the earnings is rising, right? Love that stock. Today may not be the right day to buy. Why? Because the stock is trending down today, a down candle. Go to the next one. Hovnanian, not nearly as nice a graph as DHI, but over the last 3 months, definitely moving higher because the industry is pulling that stock up. This is not a leader in that industry, but it is a mover based upon the industry's move. The earnings have gone from negative to positive with the nice move up, and they're doing better as far as earnings is concerned. Let's go to the third one, which is KB Homes. I like that one as well as DHI as well. Beautiful equity curve on the stock, beautiful earnings. They did pull back, but look at that. They've still moved higher because it's a good, solid company. So if I'm looking at the stocks within that industry, DHI and KB Homes may be two of the better ones rather than the third one that we looked at, which was Hovnanian. All right, but this is the kind of analysis that puts these kinds of trades into your portfolio. All right, so that's looking at that industry and 3 stocks within that industry. Before I go on to the next story, Saborium says, I may sell some holdings on M1 Finance, dollar cost average, and sell those that VV says sell, but monitor them in a watch list in case they recover. That's always a good thing to do. Even if you get out of a stock, you can put them into a watch list and see if there's a better opportunity to still go and buy it again when it's starting to rise again. Nothing wrong with that at all. Nothing wrong with that at all. All right, let's go to our next story. The next story talks about marijuana stocks. Now, as we look at this, pot stocks up on House passage of bill allowing bank involvement. Ooh. The House passed the Safe Banking Act by a vote of 321 to 103 that shields banks from federal prosecution if they conduct business with cannabis companies in states allowing legal weed. 229 Dems, 91 Republicans, and 1 independent voted in favor. So now this is a big bump up for the marijuana companies, which were considered to be a lot more speculative play. So marijuana slowly but surely is becoming legalized in more and more states and in Canada. So put that all together, now you get to save banks from, if I have a CBD company or that kind of a business that deals with marijuana stocks, now those banks, excuse me, have some protection against the government, so the government can't come and seize any funds or anything like that. That could be a big bump up for marijuana stocks. Next is the Republican-controlled Senate, although the bill should pass there as well, albeit with possible amendments. So we're going to look at one ETF for marijuana, which is MJ. Could we look at the individual stocks? We sure could. But instead of exposing yourself to risk by looking at individual stocks, why not look at the whole industry, which is covered under the ticker symbol MJ? I wonder why it's got MJ. Anyway, let's go pull that up. Thank you, Joey. Let's go pull that up. All right, because it's an ETF, the price and value will always be equal, and RV and RS will be equal as well. Now, as the news comes up, relative value, which is below 1, should start moving up as the stock starts to make some headway to move to the upside based on the news, but it's not there yet. Currently, the ETF is looked at as a sell recommendation. The VST on the stock is below 1. The CI below the stock, on the stock is below 1. Let's take a look at the graph. Let's right-click, go to View the Stock Graph. This, again, is the industry. Looks at one ticker symbol to track the whole marijuana industry, still going down. As the news comes out, we can start to see if that will affect the stock to the upside. If I want to invest in the stock based on the news, that's why we analyze the stock beforehand. Right now, the stock is still pulling down, got to a level of a low, which took out a prior level, of support back here. Let me go make that line darker, style, make that a little darker, and let's take off the last close. This was the prior level of a low over the last year. It was a good level of support. Recently, over the last 2 days, we broke down even below that level. Now, we have a little bit of a hammer formation forming right here without follow-through on today's activity, but let's go see if the news is enough to pull the marijuana industry up. As of right now, it is not, and this is why you pay attention to the graphs, and this is why you analyze your stocks before just investing in it because of the news. All right, let's close out of that graph. I'm not seeing much in the way of questions today, so that's good. That means either I have you captivated or either I have you confused. Either or, Hopefully you're getting some knowledge out of what we're doing here. And this is the purpose of Trending Thursday, to see what's really moving in the market and applying the flexibility and the power of the VectorVest tool to give you more insight before you pull the trigger, or if it's a means to protect you against stocks that you currently own. All right, let's go to our next story. The next story talks about crude oil. Crude oil energy stocks extend this week's drop. So crude oil, and I'm going to look at that ticker symbol, USO, slide for the third straight day, with WTI crude returning below its 50-day moving average, and now just above the level seen on September 13th, the day before the attacks on the Saudi Arabia oil installations. All right, the energy sector, XLE, is following in crude's footsteps, dragging along the bottom of today's sector standings and also near its 50-day moving average. So let's do this. Let's get back into the software. Let's go pull up the oil, which is USO, the U.S. Oil Fund ETF. Remember, on an ETF, price and volume will always be the same. Relative value and relative safety will always be equal as well. RT, though, is just barely below the value of 1, even though it's been falling for the last 3 days. Let's take a look at the graph, though. We'll view the stock graph, and there it is. Oil right now was on a nice little tear back from December to May. Nice run up on oil, pulled back. Right now, though, oil is moving a tad bit sideways. Last 3 days, 1, 2, 3 days, it's been moving down, but notice our red bars here, our red candles, are open candles, which is a bullish sign on oil. The 3 and the 8 have crossed bearish. I would definitely like to see oil, or in this case the USO, start moving out of the range of where it is right now before I even think about getting into it. So oil is being hit. We can see it in the software. We can see it by way of a graph. It may not be where you want to be. And if you are still holding some oil stocks, you need to know that at some point in time, you've got to put the tourniquet on to stop the bleeding. Now, in regards to the bleeding, the stock is not pulling terribly down. This was the big move from this point to this point. If you're in it now or jumped in somewhere in this area, you're not terribly down, but keep in mind that oil is moving down as an industry. I want to take this off a second. Let's go back to the industry viewer. I'm going to go back to the industry viewer. Oops, that's not what I wanted. Let's go back to the industry viewer. I'm going to sort the industries from the best industries. Notice that since we've been talking, building, residential, commercial now has become the second best industry. When we looked at it earlier, it was the third best industry. I'm going to sort this now by RT descending. Let's see what's at the bottom of the list as far as the industries is concerned. How about we just talked about marijuana? Out of the 221 industries, right now, this is 220. Look at petroleum down here at the bottom. Petroleum, U.S. exploration at the bottom. Petroleum at the bottom. So we can clearly see that not only the USO is falling, but petroleum, as far as the industries are concerned, are towards the bottom of the list of our indices. So not indices, industries. Woo! All right. So again, utilizing the power of the software will help to corroborate the stories that you are seeing that we're talking about for Trending Thursdays. So you don't have to go it alone. When you read these stories, we have a tool like VectorVest to help us to be on board with what's going on. All right, let's start to get into our next story. Let me go back to the watch list viewer, go back to 926. And before we get into our next story, I do have a statement here. Yvonne says, I agree. You know CNBC is saying oil has more on the upside. I don't think so. So Yvonne, you notice that I am not giving you my opinion. I'm allowing the software to fill you in with the rest of the story. That is the power behind the VectorVest software. And if there's any of you out there who are viewing VectorVest for the first time, you are getting some insight as to what VectorVest can do for you. All right, let's get into our next story, which in this case happens to be the last story of the day, and it's looking at Rite Aid. Rite Aid earnings per share beats by 5 cents, but misses on revenue. So Rite Aid, the quarter two non-GAAP, whatever that is, the earnings per share was up 12 cents. It beat. But the revenue missed by 76 cents, or actually the revenue missed by 0.9, about 40 million. That's a lot. And so a stock can meet or exceed its earnings, but forward guidance or revenue can pull it back down. So let's take a look at what happened with Rite Aid. All right, that's the story behind Rite Aid. Let's go back into our watch list. Go look at Rite Aid. There it is, slightly undervalued, which is a good thing. Good upside potential for the long term with relative value above 1. The stock, though, is not a safe stock overall. All right, so when earnings comes out, you may not want to hold this stock during earnings because it may have a low probability of meeting or exceeding its earnings. Now, what is happening with it, though, is RT is above 1. It is still in an uptrend and in a strong uptrend. VST is above 1. The CI, this stock is susceptible to long and lengthy price declines. They have earnings, negative earnings on Rite Aid. Now, if earnings is the engine that drives the stock's price higher, what do you think is going to happen with a stock that's got negative earnings? All right, keep that in mind. They are growing their earnings at 14% a year, but even growing it that much, they still have negative earnings. Let's right-click on the stock, view the graph. So, man, oh man, this is where the earnings kicked in, right about here, somewhere up in here. Stock's price pulled back. Look at the negative earnings. And not only is it negative, it's getting negativer. Is that a good word? Well, it sounds good to me. It's getting more negative. So something is not going on with the running of the company, which should catch your attention. The stock's price is definitely falling. Even with the split that happened on 4/22, the stock's price still falling. Trying to do a little bit of a run up right now. Look at today's activity. That candle is known as a shooting star, which could possibly be a bearish position as well. Let me show you where resistance is right about here. Let's make that a little darker. Looks like a good level of resistance too. Hard time breaking above that level of $10.07. Where did today's activity stop? Right there. Tom, what do you know about this? Tom, you know what I'm going to say, but I'm going to let you type it in the room. When we look at these levels of resistance or levels of support, what do I always say, Tom? Look at where the price of the stock's price stopped today, right at resistance. And Tom is taking a long time to type it in, but you'll see him type it in as I say it. This stuff really works. All right, this is why we look at support and resistance. This is why if I can see over and over the stock's price stopping at a certain level, I still know that it's stopping at a certain level. Those are good opportunities if I own the stock to get out at the right time. There it is. Tom said it. Man, this stuff really works. That's absolutely right. And even with today's activity, a lot of selling pressure on the candle as the stock's price retraced from its high for the day. All right, close that out. And folks, that is my last story of the day. Here are the stocks that were represented in the stories for the day. We keep a watch list of all of the stocks that we talk about on a week-over-week basis. But here are the stocks for today. And keep in mind that DHI, Hovnanian, and KBH were all part of one story. And utilizing that whole idea of the industry viewer, we were already on top of these stocks prior to them becoming newsworthy. And that is the beauty of being a VectorVest subscriber. Now, with all of that being said, we have about 15 minutes. Joe, we did good on time today. All right, so we've got about 15 minutes left. What I'm going to give for you now is the opportunity to analyze any stock that you currently own or any stock that you may be interested in. Now, Trade Shark, you can type your stocks into the room, and I will look at as many as I can with the amount of time that I still have left. So by all means, start to put your stocks in. Let's go see if there's anything that we can talk about. MCS. All right, let's go do that. Badger says MCS. Any other stocks? Folks, this is free analysis, so let's take a look at them. EROS, comma, APPS, comma. Before we start looking at any of these stocks, always understand what's going on in the market. Is this the right time to be buying stocks? So always keep that in the back of your mind. HIIQ, comma, eBay, EBA. I did see a story on eBay today. I didn't choose it as one of the stories for today. I think that, what was the story on eBay? You don't remember. Something was going on with eBay, but it wasn't a story that I chose for today's session. All right, Square, SQ, and what else is here? ANET. The
CEO resigned.
The CEO resigned. That's what it was? Okay, thank you. There you go. SQ, I got Square in there. Ford, comma, Amazon, comma, NetEase, NTES, comma, Shopify. Ooh, Shopify's not a good one. Comma, MTCH, comma, AAOI, comma, STNG, comma, TVIX. You know me, I'm not a big fan of the TVIX. All right, one more stock, OMI. All right, oh my, all right, TVIX, and I gotta put the comma, TVIX, comma, OMI, comma, you still putting in stocks, Uber, comma, no more stocks, VER, comma, O. All right, no more stocks, that's it. VER, comma, O, Glenn, VER, comma, O, VER, comma, O. All right, let's take a look at these stocks real quick. I'm gonna look at them all on a 3-month graph. We're gonna look at earnings per share, and I'm gonna add one more thing. I'm going to add volume if I can find it. I don't have it here. Add parameter, price volume, let's add volume. I'm not gonna add any, I forgot one. No, I didn't. I didn't put that stock in there. Everybody can see that, Rich, just to let you know. No, don't put them in timeout yet, but don't put them in timeout. I'm not talking about that. Nope, I'm not saying that. Okay, there you go. All right. Next thing, so Ford, looking at 3 months, last 3 months, looking at the 3 and the 8 exponential moving averages. All right, what is Ford doing? Moving sideways. What is also going on? Let's go put these a little better. Change the style for the 3, make it green, make it a little darker. And for the 8, make it red, change the style, make it red. Why do I do this? Because I make it real simple. If you see green above red, it's bullish. If you see red above green, it's bearish. So Ford right now pulling back off of its highs here. That's a little bit of a shooting star with follow through and the 3H crossed. The stock, even with the down day, still even today, the stock is still pulling down. Now, be careful shorting a stock that's got rising earnings. Now the earnings is right about where it was about 3 months ago. Earnings came back after being hit, started moving up. Be careful shorting a stock that's got rising earnings. All right, but right now the stock moving slightly down, a little sideways. I do the same color scheme, says Robert. Again, it makes life easier. Let's go to the next stock, Amazon. Not a good time to be in it. Pulling back, the 3 and the 8 are bearish, has been bearish for 1, 2, 3, 4, 5 days. Even with a rebound day here, no follow through. 3 and the 8 still bearish, down day to day. Earnings are lower than they were 3 months ago. Earnings were rising and then they fell, stocks fell. Man, not a good time to be in Amazon right now. Next stock, eBay, a lot of sideways move. I have a good level of support sitting right about here. Good level of support, make that a little darker. I got a good level of support using the intraday wicks on the candle. Are we above that? Yes, we are, but the 3 and the 8 are negative. The stock's price looks like it's bouncing off of that level of support, not quite where I want it to be yet. First thing I would look for, let's see if the 3 and the 8 can cross, number one. Number two, let's see if it can break out of this level of resistance. Let's go make that a little darker. Let's get out of this level of resistance and then take on the 3-month high. But right now, the stock is in a channel. Earnings are rising. That's a positive about it, but not ready to pull the trigger on it just quite yet. If I own it and I haven't gotten out of it, a good way of getting out is if it breaks below this level of 38.54 or a good level of support, that may be a golden opportunity for you to pull out of the trade if you haven't as of yet. Next stock, MCS. I love the equity curve. The 3 and the 8 have crossed bullish, broken through a level of resistance, hitting a new level of a 3-month high. What catches my attention, though, is earnings is lower than it was 3 months ago. But if you like the stock's price moving up, keep in mind, the market is moving down. Be careful with these stocks that are high flying while the market is moving down. They're bucking the trend. Be careful how you say that, Joey. They are bucking the trend. Be careful about going against the trend of the market. But the stock nonetheless is moving up. If you do decide to pull the trigger on it while the market's moving down, put tighter stops on it. Put tighter stops. Charles, if I have the time, I will try to look at Apple and Sudhir, the same thing. I will try if I can. This is why I asked for them when I did, so that I can put them all in to watch them. All right, they could be. OMI, beautiful equity curve for a while. 1, 2, 3, 4, 5, 6, 7, 8, 9. 2 solid weeks going up. Then we got one black crow, follow through, 3-8 cross. So good opportunities to know when to get out of a stock. That's a bearish candlestick pattern. That's the 3-8 cross. That would have been a great opportunity to close out of the position if you were in somewhere along here. That way you wouldn't have been riding it down to where it is right now. But we've got a little bit of a U-shaped bottom. Could it have found the floor? Possibly. What's the first thing I'm looking for? I'm waiting for the 3 and the 8 to cross. If they do, I've got good upside to this level of the high, which is at a price of 843. So once the 3 and the 8 cross, I do have upside, but be careful again, because the market is moving down. Be careful with these stocks that may start high flying. If you pull the trigger, you're going to pull it a little early. It's going to be more of an aggressive move. But if the stock's price keeps going higher, I am not going to tell you not to buy it. But I will let you know that if you're buying a stock that's going against the trend in the market, you're exposing yourself to more risk in that trade. Next one, NetEase, moving a tad bit sideways right now. I love the earnings per share. Definitely love the earnings per share. Let's throw volume on here as well. Actually, let's go take off earnings per share. So the volume is, there we go. So volume is pretty steady on the stock. Right now, moving a tad bit sideways. I like the pullback where the 3 and the 8 broke down, finding a level of a floor. The 3 and the 8 are getting ready to run up. It's trading at 274.80. What's the high? At 282. I got a little bit of room that I can make on this stock. Always look at your most recent swing high as a good profit potential if you're getting into a stock that is pulled back. I do like the earnings. I do like a nice up day on the stock, but keep in mind you're going against the trend in the market if you pull the trigger on some of these trades. Sting, nice move up here while earnings was rising. That is a bullish engulfing with follow through. That is a bullish engulfing pattern right here with follow through. That would have been a good day to get out. Now, if you didn't get out then, this would have been another good day to get out when the 3 and the 8 finally did cross down. The reason why you want to try to take your profits as much as possible, I'd hate to see you ride the stock's price all the way down. Look at what's going on in the graph. Use the graph as a means, along with your stops, to make sensible decisions on getting out of a stock before you have to write it down to where it is. Because if you do, now you're praying. Praying is a 4-letter word. Now the stock is bouncing up and you're going to say, oh, I hope. That's a 4-letter word. I hope that the stock's price goes up. And instead of doing that, don't put yourself in that situation. Use what you've learned or understand about the graphs to get out at the right time. The 3 and the 8 is a good way to get out of a lot of stocks from a swing trade perspective and also from a trading perspective. Let's go to the next stock, TVIX. Well, that looks at the volatility on the market. It's about to jump up. Right now, it's moving sideways for the last 3 days. The 3 and the 8 are not solidly, but are above. I'd like to see it break at least from that level, that high from yesterday, and start moving up. So that's where you stand as far as that is concerned. Looking at HIIQ. Nice run up for the last month, during this month of September. The 3 and the 8 cross moving up, more up days than down days, probably a higher CI stock. Look at today's activity. What is that candlestick pattern known as? Anybody? What is that candlestick? That's a long wick. What is that candlestick pattern known as? Somebody needs to type it in the room. I got nothing to drink today, so I can't drink any coffee or anything. Joey, you didn't get me any donuts or anything. Oh my gosh. All right, nobody answered. There you go. Thank you, Kirby. That is a hanging man, and it could be a possible reversal pattern and we'll have to see what happens with tomorrow's activity. But that is a good way, if you're in the stock, to think about taking profits on it, especially if you have followed through with a down move tomorrow. All right, so let's go to the next stock. AAOI, big down day today. That's a little bit of a piercing pattern, almost a dark clover, or dark, it is, it's a dark cloud cover pattern, just a little bit higher than the high. Watch the volume, look at that negative earnings. Be careful with the stock if you own it. If you own it, this may be a good opportunity to get out. What am I waiting for? Let's see if I get followed through with tomorrow's candle, number one, and number two. Let's see if the 3 and the 8 cross bearish. All right, let's see if it crosses bearish. So Kev says, I bet that's a Kirby stock. Kirby, did you put that in there? Kirby put it in the TVIX. Kirby put it in the TVIX. Who gave me AAOI? That was Rich. Yeah, Rich trades a lot of options. Rich trades a lot of options. And I would not be bullish on that stock. I would not be bullish on that stock. And hopefully, Rich, you're probably setting up for some puts, I would think. I'm not feeling this as a bullish stock right now. Negative earnings. So that's my opinion. All right, let's go to the next stock. Woo! Eros was another nice runner when it was running. This was a little bit of a one black crow. That was the follow. That was the real follow through. That would have been a good opportunity to get out prior to the 3 and the 8 crossing today. Big down candle on Eros. Big down candle on Eros. And the stock moved from a buy to a hold. If you're not out of it now, you might want to consider getting out of it with the big down day and the 3 and the 8 crossing to the downside. Cheer for the Dallas user group. There you go. There you go, Alessandra. Let's go to the next stock, which is ANET, pretty much moving sideways. I can clearly see that. I do like the earnings. Because the stock is moving sideways, volume will pull back. Volume will pull back. And you do have Eros puts. There you go. I told you. I figured you would. I figured you would. Right in line with that. Rich is trading, or Trade Shark is trading Eros, but to the downside. Good call. Good call on that. ANET, though, moving sideways. The 3 and the 8 just crossed. Even though the 3 and the 8 just crossed, I would like to see us break out of this level of resistance right about here. Let's get out of that. Let's get out of that traffic area. Let's get out of that traffic area before, if you're not in it, before you pull the trigger. If you're still holding it, that's okay. All right, nothing, the 3 and the 8 cross and then cross back up again. If you're in it, you're okay. But if the stock goes down below this level of a low, that's a long way to go, though. If it goes below that level of a low, you definitely want to consider getting out of it. Or if you want to get out of it even sooner, look at the previous day's low. Boom. That tightens that up a little bit. Look for the previous day's low as a means to get out, which would be at 232.84. Which would be at 232.84. All right, let's continue to go. I know, well, I'm still right on time. Apps, another stock that was a beautiful high-flying stock. How could you have gotten out of that? What's the candlestick pattern you see right here? Anybody? I know you guys are on a little bit of a delay behind me, so I'll say it. That is a bearish engulfing pattern with follow through and the 3 and the 8 cross. That would have been a good opportunity to get out of apps. That's made a nice move to the upside. Now, why is that important looking at the 3 and the 8? Look at these two solid down days. Notice that the 3 and the 8 never crossed bearish, and look at that run up. But when the 3 and the 8 do cross, the stock's price tends to fall. That is why we look as a preliminary indicator to get out, looking at the 3 and the 8 crossing over bearish. I do like the rising earnings on it. All right, but right now may not be the right time to be in that stock with the sideways move of the stock, okay? Let's go to the next one, Shopify. Man, I looked at this in the Jockey Club this morning. This stock is getting killed. Even though we had a nice little bit of a rebound day yesterday, that is a bullish engulfing without follow-through. It did engulf the prior day's candle, no follow-through. The 3 and the 8 is still bearish. The 3 and the 8 are still bearish. So, man, oh, man, I wouldn't be in Shopify right now. I do like the rising earnings, but it may not be the right time by way of price action to be in the stock. All right, and not only is it moving down, look at the volume. People are jumping out of the stock in droves. Look at the volume, is pretty steady, even with the downward move on the stock. That's important too. All right, the next stock, Square, look at that. Who gave me Square? Who gave me Square? I don't know, but I like that the stock might have found the level of a floor. The 3 and the 8 have crossed up. Love the earnings, love the rising volume as well. But again, keep in mind, even though these stocks are starting to move to the upside, the market is moving down. This would be more of an aggressive trade. So Rich gave me this as well. Are you bullish on this? I would think that you would be. I think that you would be. But all I'm saying is just be careful with the market's move right now, number one. And number two, let's see if it's got the wherewithal to break above this level of resistance. Or you could use that 65 as a level of knowing when to get out of the stock. All right, how about that? So I've got a level of resistance right about here. Let me make that a little darker. Even if you're playing options, that could be a great profit target on a stock that's going to do a short-term run up. That could be a great profit target. So if you bought maybe the 60 calls, you get out at 65, you're going to make some money on the trade. That's not a bad way to manage the trade. I do love the rising earnings, and I love that as the stock's price is running, volume is starting to pick up because volume is conviction. This may not be a bad trade, but you probably want to look at that strike of about $65 as a level of a profit target from an options perspective. All right, next stock, Match. Oh, there was something that came on Match. I saw my wife and I met on Match. By the way, a couple of days ago, we had our 2-year anniversary. We met on Match, but something was in the news on TV about Match. I don't remember what it was, but the stock overall does have rising earnings. It is pulling back. The stock just recently got to be a sell recommendation. The 3 and the 8 crossed a couple of days ago. Nice rebound day today, but still probably not the right time to get in. I would definitely at least wait for the 3 and the 8 to pull back up before I pull the trigger. All right? How do you know we bought the 60 calls? Rich, I trade options, bro. What do you think? What do you think? So the 8 over the 3 means bearish. 3 over the 8 means bullish. That is absolutely right, Kev. This is why I made the colors green and red. Green for the 3. When you see green above the red, it's bullish. When you see red, which is the 8, above the 3, which is green, that's bearish. Bearish is red above green. Bullish is green above red. That's why I have that color combination. That's why I have that. No, listen, I told you. You trade options. I made a lot of money trading options. I moved $1,000 into over $90,000 in 8 years, primarily trading options. So you know I know how to trade some options, bro. All right, let's go to the next stock. Uber. I'm not feeling Uber. Look at all of that negativity on earnings. Man, even though it's starting to get better, I'm not ready to pull the trigger for that to the upside just quite yet. I'm not ready to pull the trigger to the downside for that just quite yet. Let me show you something. Uber is a little bit of a channel. Let's change that. I got a level of resistance sitting at about $35, and I got a level of support sitting at about $30. I'm in a $5 channel with this. I'm not playing calls. I'm not playing puts. And I know that you gave me this trade shark. If anything, I would play a condor on this. I've got a beautiful level to sell a call, or I can channel this trade. I've got 2 strikes, a 30 and a 35. Actually, yeah, I'll put that onto 30. I got a 30 and a 35. I would actually play a condor on this. Absolutely. So as an options player, I can make money if the stock goes up. I can make money if the stock goes down. And as an options player, I can make money if the stock doesn't do anything. That gives you more advantages playing options rather than just playing stocks. So I can be non-directional and still make money on the stock. And Uber is probably a great iron condor play where as long as it stays in between these 2 strikes, which are beautiful, $5 spread, I can make some money on that. I would actually play a condor on that because it's not, look how long it's been in that channel. Yeah, that looks like a good trade for a condor. All right, next one, VER. This is an Alessandra trade. Slowly but surely still moving up. A lot of sideways action on it. It's been remaining between a buy and a hold recommendation. New high today, but look at the pullback as far as the wick at the top of the candle. It is pulling back. It's a $10 stock. Love the earnings. Not sure if I would pull the trigger on it yet. If I own it, I'm probably fine because the stock is in a channel. If I'm thinking about when to get out of it, I'm thinking about getting out of it if the stock's price breaks below the level of support, which is sitting at about $9.39. That's probably a good level to get out. Right now, the stock's price, the body of the candle stopped right at resistance at about 10 bucks. So, based upon that, if I own it, I'm fine. If I'm not in it, I'm not thinking about pulling the trigger on it just quite yet. But nicely in a channel, here's a good level to know when to get out. If you want to get out earlier than that, use the 3 and the 8. The 3 and the 8 will get, the 3 and 8 crossing to the downside will get you out quicker than getting out at this level of support. All right, how many more stocks? Last stock. Oh, beautiful looking equity curve. Nicely moving up at about a 45-degree angle. Earnings are fine. They are higher than they were 3 months ago. Nice pop in earnings. Now, this is something that catches my attention. The stock's price is moving higher, but what's volume doing? All right, if volume is conviction, if the stock's price is moving up and volume is moving down, be careful with that. All right, be careful with that. I'd rather have you in a stock that not only is rising, but the volume is rising along with the earnings. So the stock's price is moving up. Price action looks great. Volume tells me that less and less people are investing in the stock. That's what helps to drive a stock's price higher. People getting into it and buying it, right? So just be careful with that trade. That takes into consideration all of the stocks that you just gave me today. Hopefully, you've got some good insight as to what, did I just close out of the software? Oh, that's great. I just closed out of the software. All right. So with that, hopefully everything is okay. That was interesting. And hopefully, no, Kevin, I just got out of the software because Joey broke it. So we got out of the software. Tell you what I'm going to do. You know, this is why I give the opportunities for you guys to put the stocks in here. When I ask for them, hopefully you're getting on board. Always have your stocks ready. Always have your stocks ready so that when I call and ask for them, you can just type them into the room. All right, so next week we'll put some more stocks. Hopefully you guys made some good observations on the stocks that were in the news, excuse me, and how we did further analysis with the VectorVest software to corroborate the story if it was right or wrong, or, you know, help you to make a better decision. Maybe you found some stocks that you can get into. Just keep in mind, as the market is still flipping over, just be careful with those bullish trades that you put on. Any bullish trades that you're currently holding, be careful with them. Tighten up stops. Don't give back the profits that you've made on it. If nothing else, try not to lose more than half of what you've made on any position. Always think about that as well. All right, last time before we go, like, share, subscribe. If you know people who are interested in the market, share this video with them. All right, and note that when we post these videos up, if you've got things to say, type them in the comments. I often look to see if there's any comments in the videos after Joey posts them up. Go back, look at the video, type some comments. Let other people who are not subscribers know how you feel about the software. Whether it's positive or negative, I'm okay with that, even if it's negative. All right, because it will show the realism of the software, that it is not the be-all, tell-all. You know, but we do give our people an opportunity to make money in the software. So, and when you see this video that we did today, once it goes up, add some comments to the videos. Let people who don't have the software understand how you feel about the software. So I'm going to tell you guys, please do that, especially on these YouTube videos, to catch the eye of the people who do not have the software, so that by way of your comments, they can feel more comfortable in thinking about taking a subscription to the software. I told you my goal is to help to grow this platform just like we did on Twitch. We're going to grow this YouTube platform, and it's going to be because of you that we make that happen. All right, so put your comments in the videos. Let people know what you think. Like it. If they see your comments, maybe they'll like your comments as well. And then subscribe. If you are here and you are new and you haven't done that yet, subscribe to our live YouTube channel. With that, folks, I want to say thank you very much for being here. Do you think it's a good time for contra ETFs? Yes. Stepping into contra ETFs, check to see which ones are moving the best. Check to see which ones are moving the best. I would rather have you hedging with contra ETFs right now than to start putting on long-term shorts. All right, the market is still not where it needs to be for you to be in long-term shorts. Hedging by way of contra ETFs may be a better play right now, but go to the ETF viewer, go to the contra ETFs, go see which ones are moving up the best or the fastest, look at their graphs. And based upon those graphs, guess what? You'll know when to get out by looking at something like the 3 and the 8, and look at the most recent swing high. That may be a good profit target. So there you go. With that, folks, have a great day. Adios, arrivederci, ciao, au revoir, sayonara. I ain't gonna see none of you tomorrow. Later.